VF Corporation, stock ticker VFC, are trading currently around $28.44. Year to date, they are up around 2.5%, but if we zoom out to a 1 year period, then they're actually down around 55%. They recently released their earnings where they beat both on the top and the bottom line, but they also had to cut the dividend by a pretty significant amount, 41.2%. So from $0.51 per share to $0.3 per share. So it was a pretty huge cut. And the reason for this dividend cut was to be able to accelerate the path back to their target dividend payout and also to get a more healthy debt to EBITDA ratio and then rebuild the dividend from there. But let's jump into our stock screener to take a closer look at the numbers behind VF Corporation and to see if it's at a healthy, fair value at the current time. Currently, they're trading at a PE non-GAAP forward ratio of around 12, which is pretty below their 5-year average, which is around 22, if I remember correctly. And also, as you can see, the payout ratio is way too high. So that is also why they wanted to cut the dividend going forward, so they could actually have a more healthy balance sheet. The price is pretty close to the 52-week low, and also the EPS growth is a pretty healthy 11%. The ROE also a bit under the 15%, but still 12.5 isn't too bad at all. And down here we have the net debt to EBITDA. It's a 3.4 right now, and it's getting dangerously close to 4 and above. So I fully believe they made a good decision in cutting the dividend. I felt it's a bit weird to raise the dividend to 0.51 and then cut it just after again. But again, that is something they needed to do. Jumping into the dividend data tab here, you can see that if you go back a few years, then the dividend growth rate was actually pretty nice, 20%, 15%, and so on. But if we come up here, the dividend growth rate over the last 5 years, then you start to see a negative, and the last one was minus 40%. So the dividend growth rate over the last 12 years annualized is 2.75. And if we come down here a bit to the dividend yield charts, you can see that it's actually was at a pretty massive value compared to at least the average dividend, at least 35 to 25% discount according to these charts at least. And there still could be a pretty healthy discount right now for the stock, I believe. If you come down here, the cumulative return of VFC compared to the S&P 500 is pretty bad. You can see you are actually would be at a negative if you had invested $10,000 for 10 years ago. But let's jump into our different valuation models. We first have Graham's revised valuation. The growth rate with the analyst says 0.7, but I think 2% is pretty decent, so they should be able to do that at least over the next couple of years. Compare that to the average yield of AAA corporate bonds and the current yield of AAA corporate bonds, we get an intrinsic value of just under $10. The next one is the discounted cash flow, and you can also see here we do take the free cash flow from the different years. We apply a growth rate, and since it's being negative, I use the same 2% again, which is, I think, very conservative. We project the future free cash flow into the future. We discount them back to a present value down here, and then we sum everything together, and we get a fair value of $78. The dividend discount model, where we do have the new dividend in, you can see the growth rate was minus 14% as mentioned earlier. With a growth rate of 2% going forward, which I think is in line with what they want to do going forward, we arrive at an intrinsic value of just shy of $21. The next one is the multiples valuation, where we compare to a lot of other stocks that are similar to VF Corp, but here it says their EPS is 26, so I'm not sure why that is, but this one I do believe we should jump out on, so I won't go into much detail about this one. The next one is free cash flow valuation, and since they don't have any free cash flow really in 21 due to their balance sheet being so poor, I actually used the one from 2020. If we use that one going forward with the average price to free cash flow ratio of around 34, we do arrive at an intrinsic value of 62. The last one is the Pillar Lynch model, where combining the growth rate, dividend yield, and the PE ratio, we do arrive at an intrinsic value of $21. Before we jump into the summary, if you've come so far, thank you so much for watching. Please subscribe to the channel and like the video. And let's jump into the summary, where we can have here the summary for VF Corporation, where we have all 6 of our valuation models. As you can see here, I have chosen to exclude the multiples and also the free cash flow valuation, mainly based on the multiples being pretty weird when I did it, to be honest, so I left that one out. Also the free cash flow, I did skip it simply because the free cash flow was negative for this year. So averaging all these together, we arrive at an average intrinsic value of $32. With the current price being $28, the average current discount is around 12%. So even if we put in a margin of safety of, let's say, 10%, then the acceptable buy price is pretty much in line with the current price. So if you believe in the long-term outlook of VF Corporation, I think it's a perfectly fine time to buy. Thank you so much for watching. I'll be seeing you in the next one.